Welcome to Trading the Markets. This is Wicho Joseph. I'm not a financial advisor, so everything here is just for educational purposes. All right, so what I did, I play Wells Fargo, but I knew that earnings was coming up for the banks this week. And I seen that on Friday, I seen that Wells Fargo actually beat earnings. So when it comes to earnings is very special when you play in the market because basically you could look at it like this. During earnings, people have expectations, right? So whatever expectations they have, they gas up what's gonna happen, right? Nobody knows what's gonna happen, but on both sides, for the up and the down, there's more gas, there's more expectations. They think it's gonna make a bigger move than it actually does. You know what I mean? So before earnings, before the numbers come out, all that gas, once the numbers come out, all that gas deflates. You know what I mean? All of it just comes down. And that gas, when it comes to options, is called implied volatility. So let me get into my slide a bit. Actually, let me go to charts. Just to show you what I seen at the time on Wells Fargo. So let me show you guys what Wells Fargo WFC. So this is Wells Fargo right here. And let me just hide all my lines. The main thing is notice down here. So any stock you look at, there's things on the bottom. Or I think I'm hiding it. I gotta hide it so I can see. Hold on. Let me minimize this. So yeah, so right here, you see where it says E? You guys see these E's down here? Let me just highlight. Yeah. So the E is for earnings. The D is for dividend if the stock gives a dividend. So what I seen was on Friday, I clicked on this E right here. So first on the charts, right? Let's look on the charts. I seen that this candle right here, it's what you call a bottoming candle. Dojis, you're gonna see a lot of dojis near the bottom and tops of trends. So that's the first thing like you just notice. Then I noticed that it had bounced right here on this line and it shot up, but I missed it. I seen it, I didn't take action, I missed it. I'm like, okay. But here's the thing. I seen that earnings was coming up. And remember, I told you that earnings it gasses up the expectations. So the dangerous part is when you play earnings, if you stay in there too long, when the expectations come out, all that gas deflates while you're in the contracts. So literally, your contract could not even move. They don't go up. They don't go down. But or better yet, your contracts can go up and you still lose money. You guys heard what I said?
You can still lose money
Yep.
if the
Because
contract goes the direction you want.
it's called IV crush. IV crush.
So
And then,
Ivy Crush.
yeah, IV is implied. So you have to be very careful when you play earnings because of this. Implied volatility crush. So remember, I told you the implied volatility is the gas that people are expecting, how much they're expecting the stock to move. Once the earnings comes out, if it's a hit or a miss, all that gas calms down, it deflates. So that's what happened. So let me show you. So now I'm gonna switch over to Thinkorswim just to show you guys what I seen. Let's see. Thinkorswim. 1 second, let me just log in for you guys. And then all right, so this is my Thinkorswim. So this is my Thinkorswim, right? So go to so what I do is I have the option on my watch list right here. So now I go to chart and notice that what I do is I link my watch list to number 9. So now I link my chart to number 9. So now I can scroll through anything here is gonna appear on the chart. So now I linked the Wells Fargo, which the one that I have, which is the what is it? The $40.5 call. So the $40.5 call right here. Now when I go to charts, you can see a daily representation of where the prices were, the premiums. Let me zoom in. So you can see, so this is a daily representation of the option prices. So this was Friday right here. Let me try to zoom in a little bit better. And then I'm gonna show this a little better. Let me take away this right here. Take away that purple line. That's better. So look, this was Friday. So Friday, I seen that, remember, Friday was earnings. So Friday, I seen that it was started at 60, right? The premium was going for 60, went all the way up to 80, 82, right? But then it made a low of like 16, 20, like 20, and then it closed at 24. So I got in at the close at 25. You see how it's 25 right there? You guys see that? So this is the end of the day. And like if I break this down to like let's say a 15-minute chart, you can see it even clearer. So right here, end of the day, you see first 15 minutes, I went up there. The last 15 minutes came all the way down to 20, 18, and then I got at like 25. So I got at the end of the day, you know why? Because I didn't show you guys that how they beat earnings. Hold on, let me go back to that. So yeah, so right here, you guys will see on the chart, right here on the E. You see, I see that right there. So that's the earnings. So earnings is two things. I mean, right? Yeah, it's basically two things that they look at: earnings and revenue. I would say earnings is more important than revenue. You know why? Because earnings is what you get back as a dividend, as a shareholder. You know what I mean? So the revenues could be up and down, but how much of that money are they actually sharing with you? That's the whole point of buying stocks. So you could share, you buy shares so you could share in the profit. So the fact that they're surprised, that's why a lot of people are buying it right now. A lot of people are chasing it now. And you also got to remember that banks got destroyed ever since the dollar got attacked and the Silicon Valley Bank and FRC Bank, they both went under because everybody rushed the bank. They were trying to get withdrawals and the banks didn't have the money on hand. So a lot of banks crashed because of that. And because of that, crypto has been going up because of the problems with the banks. All right. So now I seeing that they beat earnings, that's when I if I go back to the other screen, I seen that the premiums got crushed. Do you guys see how the premiums got crushed? It started the day at 60, went up to 80, but end of the day it was at 20, 25. Do you guys see that? That is premium crush at its finest. Because if I show you the chart didn't move crazy for the premiums to move like this. You guys follow me? Anybody confused? Everybody understand?
Yeah, that's on the 15-minute. Is that?
Yeah, this is a 15-minute depiction of the prices of the specific option. So this is the past prices of that option of that 40.
So somebody's in this play that they're getting chewed out. Basically, they're losing their premium.
No, well, here's what I'm saying. This was Friday. This market rate was on Friday. Friday they beat earnings. But I don't know what time they announced earnings on Friday, but the whole day the premiums got crushed because once the numbers come out, all that gas comes out of it as well. Does that make sense? So I realized. Go ahead. You were saying something?
No, I was saying it deflated, like the gas came out, whatever.
Yeah, it deflated, and I got it right here. This is when I got in on Friday, and then I sold it right here, and then I got back in again, and then I sold it right here, and I got back in again, and now I'm still holding it. Does that make sense?
All right, and what made you think to get in at that moment?
Because one, they beat earnings. Two, the IV crush already happened. The premiums got crushed. The reason why it's dangerous to play earnings is because if you play earnings, you either want to play pre-earnings or post-earnings. Do not hold it through earnings because there's a chance that your volatility gets crushed. Does that make sense?
Nice play, bro. Nice play.
Yeah. So my plan was to play the post-earnings, and I feel like post-earnings is more safe because now I know the result versus me holding it before the result or through the result. Yeah, so now I'm just holding it because I know that if I go back to the daily and I look at these same premiums and look at where they've been in the past, I see that it was $110 per contract a couple weeks ago. You know, now we back up to 95. So this movement shows me that we could easily hit 110 and beyond. And yeah, so that's that play right there. Is this right here, Wells Fargo, this play right here. But now this leads me into my next part. So I entered many times. How did I know to enter? So let me go to my slideshow. So what you have to look for is topping and bottoming candles. So right here. All right. So you guys ever see, so a couple of patterns you guys should pay attention to is this pattern right here. This is called the tweezer bottoms and tweezer tops. You guys ever seen this before? Anybody seen this before?
Yeah, I seen that in other groups. You know, they
Yeah.
talk about that. I know somebody else that refers that as the FU candles too.
I thought the African candles was bigger than that.
Oh, okay.
Yeah. But look, this is when I entered my last time. You guys see this right here? I took a screenshot. Right here. What is this right here? You guys see that? You guys see them? You guys see the tweezer bottoms? I don't know if you guys see them. Y'all see them? Yeah.
I'm zooming in, so I can't really
Oh,
tell.
okay. All right. Yeah, so these tweezer bottoms right here. And if I go to actual chart, I can show you this was like Wells Fargo on like the 5-minute. So let me go to 5-minute. Yeah, so right here. So you guys see these bottoms right here. Literally, once you see these bottoms, you already knew. Let me move this over a little bit. There you go. Yeah, so once I seen these bottoms, so mind you, I had already entered here and then I sold here, right? So now I noticed it came back to my entry, right? But it broke this line right here. But I wanted to see if it was gonna really keep going down or if it was gonna actually hold. How did I know it's holding? Holding, 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 and tweezer bottoms. So I entered right here. I entered again right there. Once I seen that, I was like, yep, I'm in there. And then that was just me riding it from like here to finish the day off. But how did I know? Once I seen the tweezer bottoms, because what I'm looking for is this is a very strong uptrend, right? So the thing is that it was so strong, it needed to pull back. Like I knew that it needed to pull back, at least come try to retest this line. But when it broke this line, I was like, okay, watch out. But then when I noticed that it was holding, that's when I was like, okay, let's get back in. And then that's when I got back in, but it was off of that pattern. So that's the first pattern. The other pattern. The other reversal pattern that you guys should pay attention to is this one right here. Let me erase these. Yeah, so this is the evening star and the morning star. You're gonna notice that there's first a long first body, then there's a little gap. There's a little gap, right? And then there's a small body, right? And then the third candle goes into the body of the first. So this is like the reversal. Once you see anything that looks like this, you know it's reversing. Because this right here is usually a doji. And this doji right here, this is the standstill. The indecision, I call it a standstill. Basically like a seesaw. And now it goes the other way. You know, so like it shot up this way, just like you throw a ball in there. It goes in there, then it reaches a maximum height, and then it comes down. Same thing on the downside. It's going down, then it reaches a maximum depth, and then it comes back up. So that's a very strong reversal pattern, and you can base a lot of your trades off of it. Reason why I like this pattern is because when it comes to your risk and your reward, it gives you a good risk to reward. So let's say if I was to enter this, right? I can enter off the break of these lows right here. Once this breaks, I enter, my stop loss is going right here. So now I'm only risking this little part to potentially gain this big part. You guys understand? So when it comes to how much I'm risking to how much I can make, it gives me a really good risk to reward. Because now let's say I'm wrong, this keeps going up, I'm out the trade and I only risk one candle. I'll always rather risk one candle to make 4. All right. So that's that. And definitely ask me questions. I'm just gonna go through it. Unless some of you guys are busy. So those are the reversal, another reversal pattern, because I guess this is all about reversal patterns today, is the double bottom. Let me see. I have it here somewhere. But not here. Where is it? All right, the double bottom. So now a very strong high probability trade is a double bottom. Now imagine you combine all of these together. You imagine combining a double bottom with a morning star with a tweezer bottom. If you got all these in a row, and then you got a movement up, that's your confirmation. So the way you play a double bottom is so basically look for letters in the market. When you see the W, a lot of times the double bottom to go up. When you see that M, think murder is going down. You know? So that's what's called the double bottom and double top. Now let me give you a real life example. So going back to my slideshow, I actually screenshotted another one. So right here on the 15 minute, you guys see this right here? Double bottom. That's that W. On top of a double bottom, you have 2 tweezer bottoms right there. You guys see that? So that's 2 confirmations in one. Now let me go on the chart and I'm going on a 5-minute and show you guys all of them in this play. So this was SPY on the 17th. All right. So let me go to SPY. I'm gonna go to this was 17th. That was yesterday, I believe. Yeah, it was yesterday. No, not yesterday, Friday. So yeah, so it was this day. So I can go to the 5-minute, right? And right here. I have it right there. You can see it right there. So right here, let me erase. So right here, let me zoom in a little bit more. I'm just gonna zoom in right on this W so you guys can really see how this was a reversal. Look, we're going down all day and look at where we reversed. And look how it was previous support. But besides that, look at this structure. So you got double bottom, bam. Oh, hold on. Trying to draw. Double bottom, bam. On top of the double bottom, you got tweezer bottoms. You guys see that? Tweezer bottoms. I missed that tweezer bottom. Look what it did. Gave me another set of tweezer bottoms. And if you just look at this candle, this candle right here, even though it's a hammer, it still is a morning star because it gapped down and then it reversed up. from that one candle. So you guys see, there's the tweezer bottoms, there's the morning star, and there's the double bottom all in one, right? Then when we broke this right here, we retested it. If you get that, you know we're off. If you see all those, let's see, that's tweezer bottom, double bottom, morning star, break and retest. What more do you need? That's 4 strong confirmations. And that's how I knew right here, once we broke this, that was time to enter the trade. And you could either take profits right here, or once it comes back again, gives you another what? Double bottom, another double bottom. You could have rolled it up again, or you could have held. But this is how you use structure and put things on top of each other to improve your odds of success. All right, that's not that. So as far as plays, or before I get into plays, let me go over a little bit of news. So I don't know if you guys know, Netflix earnings is next. So maybe you guys can use this to play Netflix if you guys want to wait for the earnings to come out and play, or play early but get out before they announce it. But it's definitely risky. If you don't know what you're doing, I don't recommend it. And so basically they've been stopping like the shares, the password sharing, because you guys probably all know somebody with Netflix that gave you the password. So they've been cracking down on that and basically trying to get their numbers up as far as subscribers on the platform. So if they have good earnings, the thing about earnings is that it can move the whole market. Like earnings by itself is like its own market. So that's happening. And then Apple actually just opened up a new wallet, and it's going to give people 4.5% savings. Guys, I don't know if you guys don't know how big of a deal this is, but savings do not give us that much. Not even like maybe CDs. Like this is basically paying you as much as a bond. So this is definitely a way for you to actually make money off just saving your money. So big deal. Expect big things from Apple. So definitely look at the stock. And then tech earnings is coming up. So the market has a lot of gas coming that can really drive it up if everything pans out. So that's that. And then what do I want to show you guys? Oh yeah, the plays. So as far as plays, okay, so let's take a look at Bitcoin real quick. Because like I said, the banks and crypto is all affected. So if I go to Bitcoin on the daily, this is Bitcoin on daily. Notice it's coming down a bit, but it ran up. It ran up. This is not bad. You know why? Because look at the structure. It's still making higher highs and higher lows. Look. Higher, higher high, higher high, higher high, higher high. If you excuse this one and you start here, from here, it's a higher low, higher low, higher low, higher low. So even if we come down to this, let's say the purple line, or even underneath it, it would still be a higher low. So if crypto can hold this line with everything going on, then there's a chance that it can move up. And if crypto does, if Bitcoin does want to retest 30,000 and move up again, then here's the play. Here's the option play, the cheapest option play to play crypto. Let's see, erase. So we're gonna go to HUT. Remember options, like the cheaper the stock, usually the cheaper the options. So HUT is a very cheap stock. As you can see, it's been going up like crazy, but today it definitely gapped down pretty mean. So like I'm saying, if it can hold, then we can try to retest these highs. But if it does not hold, then I'm just gonna cut my play. Even though there's a chance it can maybe bounce here, it just would drop too far down for me to want to stay in it. Unless it bounces off the red line, which is also possible. But option play wise, this is the play right here. I'm already in it. I'm down. So if you guys were to get in, you guys would get a better price than me, but still keep it light because we don't know if crypto is really going to continue what it's been doing. But this is the play. So yeah. I know Naomi's in this play with me actually. So this is the hut. So 11 days expiration, give it in a little bit of time. I got an average price of like 660. It's going for $5 a share, so that's why I'm down about 18 bucks on it. But if crypto does want to make that move, then we can this might be a good. I would say if you're gonna buy it for $5 or less. Don't even spend too much on it. Yeah. So yeah, and this is the charts. This is another stock I'm watching, Zim. If we can break above this line, I definitely like it for continuation, but it played around today, as you can see. Like it definitely played around a lot. So I should have definitely grabbed it when the first time I came here, but I missed it. And silver fell pretty hard today. This may continue to fall as the banks have earnings. They may continue to fall. So silver and gold, both both fell. And PCG, I took my profits. It was playing around today. I may get back in actually, but I just want to time it. But it did make that double bottom look double bottoms. You guys see that? So that would have been a good entry. And that's about it for today, guys. Do you guys have any questions? All right, thank you for coming, everybody. If you, I'll put the recording on coffee. Have a good night, everybody.